Hi everybody, this is Osprey from MyChartCoach.com. In this video, we're going to take a look at some of the big board stocks. Okay, these are more of the large caps, mid to large cap stocks, not the penny stocks. Okay, so even though Fitbit is a penny stock here at 728, it did trade 56 million shares today. So the last video I did was the more looking at the small cap penny stocks, and so this is more of the stocks with more volume that trade options. And so Fit was the big winner today. Big options winner, closed up nearly 15%. You can see here it's got a really good uptrend going. It's been riding EMA4 support. As long as that level is holding at 669, the uptrend's intact and it signals to keep riding. You can see last week it broke above that 200 and 300 day simple moving average resistance levels. So it's firing on all cylinders. You've got the bull cross here with the 150 day simple moving average crossing over the 100 day simple moving average. Huge volume spike today. Today's candle is pushing well above that upper Bollinger Band. So if the candles did work back into the bands, as long as the EMA4 is holding, the signal is to keep riding. If you look here at the FIT weekly chart, you can see the next key level to break. It's hitting that gold line. That's the 100-week moving average at 733. So that's the big level. If it can close above that level for the week, that's going to signal it wants to head higher. If it stalls out and fails to get above 733, that's going to signal a temporary top. It's trying to break high close resistance from back here in September and December of 2017. It's above that level right now, so it would be bullish if it could close above 7. The other key level that it needs to break right here is right near $8. This white candle here, that's the high close, the highest close for 2017. And so if it could get above that, that would signal it wants to head higher. Right now, it's all about that 100-week moving average and can it close above for the week. Keep in mind, this week's candle will not set until the closing bell on Friday. Okay, take a look at Gpro. Okay, so GoPro here closed up nearly 7%. It has a good uptrend going as well, and it broke out higher today. Okay, so it broke out above high close resistance from May on Thursday of last week. That close above here was your clue that it was wanting to head higher. It did have a little fake out there on Friday, and then now it's pushing back above. Okay, so as long as this EMA4 at 602 is holding this uptrend super strong, right now it's hitting resistance from back here in January. And so if it can break this January close here on the 16th, you can see it hit that level and pulled back here in the 630 to 640 resistance zone. That should be the signal it wants to head higher. You have this close here on the bottom of this red candle just below 660. If it can get above these two levels here, then you'd be looking at a potential run up to the 200-day simple moving average at 722. Notice that it's lined up with a gap. There's a gap between high of day on this candle. There's this upper wick here and low of day on this candle. And so the 200-day simple moving average is currently lined up at the bottom of the gap. It looks like it's trying to retrace back to that level if it can get above these key resistance levels. The 640 zone is going to be a big level to break. Okay, take a look at Facebook. So yeah, this was alerted in our chat last week to look for a bounce off of the middle Bollinger Band, and so it did have that nice bounce off of that level on Friday. You can see it hit that level on Thursday and held, and then on Friday the white candle held the dotted purple line. The middle Bollinger Band is also the 20-day simple moving average, currently at 187.61. As long as this level is holding, it signals the uptrend is intact, and that is the reload level. The middle Bollinger Band here is the bottom of the bullish upper Bollinger Band channel. The upper Bollinger Band, this solid purple line, is the top of the channel, and so the candles trade between the top and the bottom of the channel. And so when they get to the top of the channel and start to stall out, that's where you lock in gains. And then then you're loading off the bottom. When they get frothy at the top, they come back, and then so the middle Bollinger Band is the reload level as long as support keeps holding. Once it breaks below, like back here in what is this, in March, that's when you can get the big drop. Okay, it held here and then got back above. Just showing to you that it has a nice uptrend. That was a nice reload off of the middle Bollinger Band. So everybody that caught the alert and loaded call options off of that alert, congrats. I did put out the alert saying that it was going to be likely back up in the 190s on Monday, and that is what happened today. And so right now the big level to break is 192, and then if it can get above 192, it's all about this 194. This 194 194 level. You know, if they can get above 194 with the close above, that would be extremely bullish, and then you know, that should be the signal that wants to head higher. If it came up and it stalled out at 192 or 194, it could consolidate. Okay, take a look at IQ. This stock has been insane. It's been on a really beautiful uptrend. It's on a blue sky breakout right now. It closed up another 5% today. You have RSI at 87, Fasto at 93. I mean, it's just, why even look at the indicators? It's just pushing. Okay, so this stock began trading back here in March on this, right here, I guess on this, well, I guess that they don't count that, but this big volume spike here at the bottom. And you can see, you know, it's been, after the pullback and it held support here in May, it's been just heading higher ever since. There was a close above EMA 4. Actually, it would be on this black candle here. You can barely see it, but the candles were riding below. That switched above, and then you can see the classic EMA 4, EMA 8 bullish crossover. You can see the pink line there is EMA 4, the line line's EMA 8, the pink line crossed over. That was your early reversal signal. These two candles were the load level. Notice the close above the middle Bollinger Band. This signaled the start of a new uptrend. And so since that happened, you know, the candles have been riding EMA's 4 and 8 support the entire time. When there was a pullback, it bounced right off of the line EMA 8 and continued higher. There hasn't been a close above EMA 4 since down here. Since the black candle here. That was the last close slightly below EMA 4. Every single one of these candles is above the pink line. So as long as that level keeps holding, the longer term swing trade signals to keep riding. This is what we call a blue sky breakout. The only resistance on the chart is this upper wick. Okay, so this is a new territory. It keeps making new territory, making new highs. As long as it keeps making new high closes, then that signals that it wants to head higher. Now, once it doesn't make a new high close, that's where it starts to cool down and pull back. Today's candle did close above that upper Bollinger Band. So if it did pull back and worked its way back in the bands, look for a bounce off of EMA 4. That trade has been working for weeks. Okay, so that trade has been working for the last, you know, the last couple of weeks. That's been working. The one time that it didn't work is when it dropped below EMA 4 here, and then that set up the reload off of EMA 8 at 30, you know, which would be a big drop, you know, from way up here at 34 down to EMA 8, but you know, it could drop down to that level, hold it and bounce and keep heading higher. The uptrend would still be really strong, just most people don't like to hold for the dip. Okay, take a look at Snap here. Okay, so it's still in play. You know, we were all over this at the start of the run. You know, when it got above the middle Bollinger Band back here on the 30th, the alerts were put out that it was heating up above the middle Bollinger Band, and then this bottom of the gap, there's a gap between the high of day on this candle and low of day on this candle, and that was the key level to break. It hit the bottom of the gap level and pulled back, and then it got above the bottom of the gap, and then it ran to our next target, which was the 50-day simple moving average. And then you could see this black candle here closed above last week on Wednesday. It did shake out and got back below on Thursday, but Friday it closed back above that green line. As long as that green line is holding currently at 1277, the 50-day simple moving average, it should signal more upside potential. Right now, that's the stop loss level. You know, you don't want to hold if it drops below. I mean, it could close below like this and get back above, but the thing is it could consolidate. You know, it needs to stay above that level now. That makes it a good play. It is holding EMA 4 this entire time, the pink line. I mean, you could just trade off of that. If that's holding, you know, the signal's just to keep riding. I mean, it worked its way through here, but it still stayed in play. Now the big level to break is going to be the top of the gap. The top of the gap is always a big level. The gap is still unfilled. You can see the upper wick here didn't quite hit that red line. Once that red line's hit, the gap will be filled, and then if it can bust through the top of the gap, you have the 50 or the 100 and 200-day simple moving averages as the next targets. So keep in mind, you know, if it does drop below that 50-day simple moving average, that's where you could get some consolidation. It could possibly drop down and test EMA 13 or the bottom of the gap and that middle Bollinger Band. Okay, take a look at Twitter. So Twitter has been on this really nice uptrend. It's been pushing super hard. It's pretty frothy right now. It has, you know, RSI is at 83. You know, it doesn't push above this level too often. As you can see here, this is a very high level. You know, Fasto's just been cruising. It's at 97 right now. I mean, look at this beautiful uptrend. I mean, it's just been on fire since it got, you know, back above the middle Bollinger Band back here at the start of May, and it's just been a good long-term swing trade. You know, you could have loaded back here in May and just been riding this entire time. as long as this EMA4 is holding at 40.52, this uptrend is super intact. You can see when it's pulled back, it's tested EMA8. That's down here at 39, and so that would be the the key level. If it were to drop below that EMA8 level, that would be a bearish change in trend, and then you could see it pull back and possibly fill this gap. There's a gap between high of day on this candle and low of day on this candle. You can see that wick almost filled the gap. It didn't come close, but it was, we partially filled it. A drop down to 38 and EMA 13 down here at 37.75 would fill the gap. Today, a doji form. Check out today's candlestick. The open is at the same level as the close. So the open is at 41.42, and then the close today is at 41.42, forming a perfect doji after a gap up open while in an uptrend. And what does that form? That forms bearish doji star reversal pattern. So just keep that in mind. Dojis and hammers form during uptrends after a gap up open, especially when they form above the upper Bollinger Band, which this one did not do. It's still below that upper Bollinger Band. That does signal a pullback. It would be a stronger pattern if, let's say, this candle right here was the doji, because it was a gap up above that upper Bollinger Band. The trading was a tight range today. The pattern did form, so you have to keep that in mind that it could take a breather here, and if it does, that 40.52 needs to hold. To head higher, it has to break above this 41.80 resistance level. Okay, so we'll keep an eye on that and see if it takes a pause or keeps pushing higher. Okay, take a look at TAN, T-A-N. This is the solar ETF. I've been charting this in the chat last week, and so we've got our eye on this sector. It's really beaten up right now. Look at all these red candles. And so you have a major pullback here. What is that, like 8 down days in a row? Nothing is down every single day forever, right? And so 5 days down is a good setup for a potential rebound, for a technical bounce. And so whenever you get more than 5 days down, the setup becomes more and more juicy. And so now that this is down 8 days in a row, I mean, the solar ETFs are just crushed, that they're really beaten up. And so, we have them on the radar this week for a technical bounce. And so we're not looking for, with China, cutting back on solar, it's totally hurting the entire sector. And so, so we're not expecting this to like take off and hit like previous high levels, but it should have a technical bounce. Okay, and so what we're looking for here is a break above EMA4 at 23.35. Once you see it close above that level, the day that it closes above, that should be our clue that it's ready to head higher, and then we'd be looking for a retrace back up to that 200-day simple moving average at 24. That would be the trade on a technical bounce. It looks like it's setting up here. It's finding support. Look at all these candles here. It's holding this 23 level. If it drops below 23, that would be a major red flag. If it gets up above that 23.35, be looking for a technical bounce. So we're going to keep an eye on this. Take a look at First Solar here. It's super crushed. Look at RSI. It's at negative 17, negative 18, super oversold. Fasto at 2. This is extreme oversold levels for this stock. Okay, so this is multiple red candles in a row. You have gaps. You have the gap down here. The gaps could become targets in the future, to fill once you get a bounce. TAN has one way up here, has a gap. Right up here is a gap between these two candles, and so so basically what's going on with First Solar the chart is just it's just getting uglier and uglier. It's basically below every single moving average that we follow. This blue line is the key level to hold. That's the 300-day simple moving average at 54.54, and as you can see now, it's well below that level. We were looking for a technical bounce here, and so far it has not happened. Once the share price gets it back above the EMA4 here, basically at 53.92, and above the EMA4 or 300-day simple moving average at 54.54, that will be a signal that the bounce is starting. It had this big volume spike down here. You have this lower wick. It looks like people were loading, but they keep pushing pushing it lower. So yeah, put options have been on fire. They were big money on the drop. Calls are going to get a turn once the technical bounce happens, so have it on the radar. What has to happen is the 15-minute chart needs to heat up first, the intraday charts, and once they turn bullish, that'll be your first clue that First Solar is starting to bounce. Take a look at Canadian Solar. Okay, so this is down another 1%, RSI at -21, Fasto at 2.7, so extreme oversold. It was starting to bounce on Friday. You can see it form this inverted hammer. Many times when you get a doji or a hammer forming during a downtrend, it signals a potential bounce. This would have been a better setup if this hammer formed after a gap down open, but nonetheless, it looks like people were loading on Friday. Today it was holding the range. As long as it stays above 12, it should get a bounce going here. If it drops below 12, then it's going to fall further. What we're looking for is a break above 12.54. If you see it break above 12.54, that should be the signal that it's in play and starting to bounce. Keep an eye on the call options. Puts were making that money during the drop. Calls should get a turn here once it bounces. Okay, let's look at CRON Group. We'll switch it up a little bit to the marijuana sector. This is the one we've been tracking. We've been tracking the whole sector, posting charts and stuff. We've been doing some more in-depth analysis in the chat on ticker symbol CRON. Notice it did make a higher low today. So on Friday, there's the low. Today the low's here, so this creates swing point number 3. You have a low, a lower low, and then a higher low, and so many times that higher low will signal the stock is setting up for a bounce. It's going to need to break back above the 100-day simple moving average in EMA4. It has to get above that 720 level, that gold line. If it can get back above that level, then we're talking about that high close again. Now, if the 100-day simple moving average turns into resistance and it fails to hold EMA13 at 689, then the middle Bollinger Band and the 50-day simple moving average will be on deck in the 650 support zone. Like I said last week in the chat, once it got below with this long lower wick here, I was shooting for that 650 zone, and so that's the target right now is 650 for a reload. If it drops below, if it holds this 690 level, then that'll be the load zone. If it can bounce off of this level and then it gets back above, it's going to be it needs to set up on that 15-minute chart and then show that it's holding support here, for that signal for the re-entry. So right now we're just stalking the prey here, and it's either going to be a re-entry likely off of 690 or 650. It would be better, obviously, for people that are looking to reload if you got that 650, but it could bounce off of 690. You're going to know it's back in play for some upside if it gets back above 720. It has to turn that 100-day simple moving average into support to break out higher. There was really big volume here. If you look here at the 15-minute chart for CRON, you can see it came down here and it bounced off of this 200-day simple moving average or 200 simple moving average on Friday, and then today it tested that level at the open, and then at the close it closed below. So that was a red flag on the close. If that level turns into support resistance at 702, if it fails to get back above 7, then it could drop to that next level, which is the 300 simple moving average at 671. It should get a technical bounce off of that 300 simple moving average. Notice how that's lined up with this middle Bollinger Band zone, and so that 660, this level 650 to 670 should be the level that it gets a technical bounce after this big drop. So keep an eye on it this week for a bounce. Okay, let's look at some cryptocurrencies here to finish it up with. I'm going to show you this Bitcoin chart that I posted earlier today. This shows the big pullback over the weekend. It had this huge drop. What happened was it failed to hold EMAs 4, 8, and 13. That's the pink line and orange lines. It was above those levels, and then it pulled back, and that was signaling downside risk. Now it dropped below this key 7,000 support zone from back here in May, and that close below does signal more downside risk. And what we were saying the whole time is that it looks like it's going to head back down to that 6,600 key support zone, and look what it did. It came right down there and bounced off that level. Look how each wick bounced off. So people are loading off the 6,600 April low, and so that is the key level to break or hold. Okay, so this is a must-hold level. If it closes below 6,600 and that level turns into resistance, now you're talking about a big drop lower. Now I know it's hard to see on this chart, but now you're going to be getting into this action back here in 2017. I mean, we'll be talking about much lower levels. So this is a crucial point on the chart for Bitcoin. Okay, how are you going to know that it's heating up? Once it gets back above EMA 4, currently at 6991. That's the pink line right there. That's the first step. It has to break this descending resistance line. It's got to turn EMAs 4, 8, and 13 into support. It's below all the moving averages. It's below the 200, the 300, the 50, and the 100-day simple moving averages, and it's right in the EMAs 4, 8, and 13 resistance lower. It doesn't get more bearish. Okay, so this is a super bearish chart. Yeah, you might get a dead cat bounce and a short cover rally here, but not sure if this is the level where Bitcoin is gonna all of a sudden take off and run. That big volume spike with the down is not good. That's not what you want to see. I mean, maybe people were loaded heavy off of 6,600 and they're playing the bounce here. We will see. You will know whether or not Bitcoin is going to make a reversal here by whether or not it stays above 6,600. Below 6,600, and that's going to be big downside risk. It could drop down into this 5,000s pretty quickly. Okay, let's look at Ethereum. Ethereum is trading below all the moving averages as well. The 200 is the red line. The green line is the 50-day simple moving average. The gold line is the 100-day simple moving average, and the blue line is the 300-day simple moving average. And then you have EMAs 4, 8, and 13. It's below every single moving average. It doesn't get any more bearish than this. Okay, so now it's down here and it's testing support from back here in May. If it holds this 523 level, it could get a bounce going. If it's got to get back above these moving averages to get the reversal going. Now, if it fails to get, fails to hold that 523 level, that's when it could get moving to the downside. As you can see here, it's got this descending resistance going on. See how it's, they're not letting it get above that level. So what could happen is you could get a bounce and run up to this level and hit this 300-day simple moving average again, and that turns into resistance and it continues lower. So basically, if it drops below 523, you could see a big drop down here to 448, possibly back down into the 300s. I mean, it has to get back above the moving averages. It's just right now, it's very risky trying to catch the falling knife because there is so much downside risk. Okay, look at XRP here. This is Ripple. Same setup as Ethereum where it pulled back and then it bounced. It's below all the moving averages, below the 200, the 50, the 100, and the 300-day simple moving averages, and it's right in EMAs 13, 8, and 4, resistance lower. It's trying to bounce down here. It's all about holding this 55 level right now, this low close from here in May. If it dropped below 55, that would be major downside risk, and it could drop all the way down here to 47 to that April level. So yeah, you can see the descending resistance. It's just not in it. The cryptocurrencies are not doing good right now. The news that came out over the weekend did not help. It just seems like the bad news keeps piling on, and like the articles have been showing, is a lot of people are invested with on credit. People are using credit cards and stuff to buy Bitcoin, at least like 20% of the people that are holding right now. And so that as the share price drops or the currencies drop lower, it's going to put people in a bind. So that could add to the selling pressure. Just keep, things are not looking rosy. Once this chart turns around and gets bullish again, and they're back above the moving averages, that'll be the time to get back in. It's going to be best just to wait, in my opinion, until the charts look better before trying to catch the falling knife. Okay, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, come check out the chat. If you come in there, I'll send you a private message, and back on top of that, and I can get you in for a free pass into the chat. Okay, thank you.